Hey everyone, and welcome back to Electro Drive News, your ultimate source for everything electrifying. The pace of change in the world of electric vehicles is absolutely breakneck, and we've got a packed show for you today with updates that you simply cannot afford to miss. Get ready, because the future is arriving faster than ever, and we're here to break it all down for you. From groundbreaking registration numbers reshaping entire markets to the unexpected financial shifts impacting EV ownership, we're diving deep into the stories that matter. Plus, we're tracking the government initiatives designed to accelerate our transition to a greener tomorrow. So buckle up, stay tuned, and let's get charged up. First up, Europe is absolutely smashing its electric car milestones, but is it enough? We've got the latest figures that are painting a fascinating picture of the continent's EV revolution. Then, we uncover a surprising financial hurdle that many EV drivers are now facing, and it's a big one. We're also heading across the pond to see how government incentives are making EVs more accessible than ever before, with some exciting new models hitting the grant-eligible list. And finally, we're revealing which specific vehicles are leading the charge in these new grant programs, potentially saving drivers thousands. You do not want to miss this. Hit that subscribe button, ring the notification bell, and let's get started. Europe surges past 1 million EVs amid shifting market dynamics. Europe has officially crossed the 1 million mark for new electric car registrations in 2025, a significant milestone that underscores the accelerating shift towards electric mobility across the continent. Data from the European Automobile Manufacturers Association, ACEA, reveals that 1,011,903 battery electric cars were registered in the first 7 months of the year, capturing a substantial 15.6% share of the European Union market. This represents a remarkable leap from the previous year, when electric cars held a mere 12.1% market share in July 2024, even trailing behind diesel vehicles at that time. The current figures show a notable increase, with electric cars now firmly establishing their presence, while pure diesel cars have seen their market share decline to just 9.5%. However, the ACEA is sounding a note of caution, emphasizing that this 15.6% market share is still far from where it needs to be at this point in the transition. In a strong political statement, ACEA President Ola Källenius, also CEO of Mercedes, alongside the Supplier Association CLEPA, penned a letter to EU Commission President Ursula von der Leyen. They are advocating for a relaxation of CO2 targets, arguing that the current stringent regulations, particularly the 2035 mandate for zero-emission new car registrations, are simply no longer feasible. The association highlights that hybrid cars continue to be the dominant choice for EU consumers, commanding a 34.7% market share, having surpassed petrol cars. This trend is expected to continue as manufacturers increasingly offer hybridized combustion engines. Consequently, the combined market share of petrol and diesel vehicles has fallen from 47.9% in the same period last year to 37.7%. Geographically, the growth in electric car registrations is not uniform. Germany leads the charge with a year-on-year increase of 38.4%, followed by Belgium at 17.6% and the Netherlands at 6.5%. France, despite a 14.8% rise in July, has seen a 4.3% decrease in new EV registrations for the year overall. Across the broader European region, EU plus EFTA plus UK, battery electric vehicles, BEVs, now account for 17.2% of new registrations. Plug-in hybrids have also seen significant uptake, with 561,190 units registered between January and July 2025, boosted by strong performance in Spain, Germany, and Italy. Beyond market share, the distribution of electric vehicle adoption among manufacturers is crucial for economic and regulatory compliance. The International Council on Clean Transportation, ICCT, reports that the BMW pool, BMW and Mini, leads with a 26% EV share and is the only manufacturer pool currently meeting its average CO2 targets for 2025-2027. The Mercedes-Volvo Polestar pool follows with 22%, ahead of Kia and Hyundai at 19% and Volkswagen at 18%. Other notable pools include SAIC, 14%, Tesla Stellantis Toyota, 12%, Renault, 12%, and Nissan, 6%. While BMW has met its targets, others, like Volkswagen, still need to improve significantly, with Nissan facing the largest gap in CO2 emissions reduction. This rapid growth in EV adoption signals a major shift, but the industry's lobbying efforts highlight the complex challenges ahead. Now, let's shift gears and explore a surprising cost that might be deterring some potential EV buyers. EV insurance premiums skyrocket, leaving drivers facing a hidden cost. As the allure of electric vehicles grows, a significant and often overlooked financial burden is emerging for prospective buyers: soaring insurance premiums. New data compiled by the digital insurance platform Insurify reveals a stark reality. Insuring an electric vehicle, EV, costs, on average, a staggering 49% more than insuring a comparable gasoline-powered car. The annual cost for EV insurance averages $4,058, a considerable jump from the $2,732 needed for a traditional vehicle. This substantial difference is attributed to several factors, including the higher purchase price of EVs, increased costs associated with specialized repairs, and a higher propensity for EVs to be involved in incidents that result in insurance claims. These elevated insurance costs come at a precarious time for the U.S. EV market, which is already grappling with rising prices due to tariffs, the phasing out of government incentives, and legislative changes. Julia Taliesin, the author of the Insurify report, emphasizes the long-term financial implications. Insurance costs, because they are ongoing, do matter in the long-term calculation of whether it costs more or less for any given person to drive an EV versus a gas-powered car. She further explains that the complexity of EV components, particularly batteries, and the specialized labor required for repairs contribute significantly to these higher premiums. A minor collision that might be a simple fix for a conventional car could necessitate an expensive and time-consuming repair for an EV, involving battery recalibration and sensor adjustments. The disparity in insurance costs is even more pronounced in states with lower EV adoption rates and a limited number of qualified mechanics. In areas like Arkansas and Idaho, where EV penetration is minimal, the cost of full coverage for an electric vehicle can nearly double that of a traditional car. Conversely, in California, a state leading in EV adoption and infrastructure development, insurance premiums for EVs are 15% to 31% higher than for conventional cars. Taliesin notes that California's high EV adoption rate and the resulting wealth of data available to insurers help to moderate these costs, creating a waterfall effect that can lead to lower premiums. As federal incentives diminish, state-level programs, like California's mandate for all new cars sold by 2035 to be zero-emission, become critical in encouraging EV adoption despite challenges at the federal level. Recent Gallup polling indicates a dip in consumer enthusiasm for EVs, with only 51% of Americans now considering an EV purchase, down from 59% in 2023. This trend could be exacerbated by the rising insurance costs. Mallory Mooney, Director of Sales and Service at Insurify, acknowledges that insuring EVs has become easier than a decade ago, when specific models like Tesla's were difficult to place for coverage due to repair complexities. However, the Tesla Model X and Model 3 are now cited as among the most expensive EVs to insure, with the Model X seeing a 36% increase in its average annual full coverage cost to $4,765. The Model 3, in particular, exhibits a higher claims frequency rate, suggesting a greater need for repairs. While most standard insurance carriers offer EV policies, specialized carriers catering to high-risk drivers often exclude EVs. Despite the higher insurance costs, Taliesin points out that EVs generally offer lower maintenance expenses and savings on fuel, which could potentially offset the insurance premiums and initial purchase price. While the upfront costs and insurance premiums present challenges, government initiatives are working to make EVs more accessible. Now, let's head over to the UK to see how new government grants are making electric cars a more attractive proposition for consumers. UK government expands electric car grant scheme, adding 6 new models. The United Kingdom is continuing its push to make electric vehicle ownership more affordable and accessible, announcing the addition of 6 new models to its electric car grant (ECG) scheme. This expansion brings the total number of eligible vehicles to 28, with the Ford Puma Jenny and e-Tourneo van being the first to qualify for the maximum £3,750 saving. The government's initiative, part of a broader £650 million investment aimed at accelerating the transition to electric mobility, is designed to reduce the upfront cost barrier that often deters consumers from switching to EVs. The grant aims to align the prices of electric cars more closely with their petrol and diesel counterparts, thereby stimulating demand and supporting the UK's automotive industry. Recent data from AutoTrader indicates a significant surge in consumer interest, with eligible car models experiencing up to an 80% increase in online inquiries since the grant's introduction. This positive response underscores the scheme's effectiveness in driving market growth and boosting consumer confidence. The UK is positioning itself as a leader in EV adoption, with projections indicating it will become Europe's largest EV market in 2024, building on a nearly one-third increase in sales so far this year. Transport Secretary Heidi Alexander commented on the scheme's impact, stating, "Our measures are driving competition in the UK EV market, boosting economic growth and supporting jobs and skills as part of the plan for change." The 6 newly added models to the ECG scheme are part of a continuous assessment process, ensuring that only vehicles meeting stringent sustainability standards, including manufacturing location emissions and the use of renewable energy in production, are approved. This ensures that the grants support the cleanest and most environmentally conscious vehicles. Ford UK Chair and Managing Director, Lisa Brankin, expressed pride in Ford's recognition, stating, "We welcome the government's decision to accelerate the transition to electric mobility and are proud that Ford's commitment to sustainability has been recognized with the full EV grant." Similarly, Nicola Dobson, Managing Director at PEUGEOT UK, highlighted the expanded choice for consumers, noting, "With 6 of our all-electric models now confirmed for the electric car grant, PEUGEOT is proud to give customers more opportunities to benefit from lower upfront costs and greater choice." The ECG scheme is a crucial component of the government's strategy to overcome consumer hesitancy, with purchase price frequently cited as the primary obstacle to EV adoption. The discounts provided by the grant directly address this issue, making EVs more financially viable for a wider segment of the population. Beyond vehicle grants, the government is also investing heavily in charging infrastructure. With over 83,000 public charging devices already available, and an additional 100,000 planned through the £381 million local EV infrastructure Levi Fund, the UK is working to ensure a robust and convenient charging network. A recent £63 million charging package further enhances accessibility, particularly for EV owners without private driveways, making home charging as affordable as 2p per mile. Ian Plummer, Commercial Director at AutoTrader, confirmed the grant's impact, noting that it prompted the highest uptick in consumer demand for EVs in 3 years on AutoTrader, and interest in cars priced below £37,000 almost doubled. He added, "Half of consumers say price is the biggest barrier to going electric, so it's fantastic to see the first tranche of models qualify for the full £3,750 grant." These government incentives are clearly making a difference in driving EV adoption and consumer interest. Now, let's get specific and reveal which of these newly eligible models are receiving the highest grant amounts. Ford leads the charge as 2 models secure maximum £3,750 electric car grant. The United Kingdom's commitment to making electric vehicles more attainable has taken a significant step forward, with the confirmation of the first models eligible for the maximum £3,750 electric car grant, ECG. The Department for Transport has announced that the new Ford Puma Jenny electric small SUV and the Ford e-Tourneo electric van-based MPV have both qualified for the highest, Band 1 discount. This means the list price of the Ford Puma Jenny is now reduced to an attractive £26,245, making it a compelling option for consumers seeking an affordable electric SUV. These two Ford models are the trailblazers for the maximum grant, with the remaining 30 models confirmed so far qualifying for a $1,500 Band 2 discount. In addition to the Fords, the latest announcement includes 4 new EVs from Peugeot and DS that are eligible for the $1,500 Band 2 discount. These join a growing list of qualifying vehicles from manufacturers such as Citroën, Renault, and Vauxhall, among others. The eligibility criteria for the ECG are stringent, focusing on the scheme's sustainability standards. This includes evaluating the emissions output of the countries where the cars are manufactured and ensuring that renewable energy sources are utilized in the production process. The Department for Transport plans to announce more eligible models in the coming weeks as manufacturers' applications are reviewed. The ECG scheme is a cornerstone of the government's £650 million investment aimed at reducing the cost and complexity of purchasing or leasing an electric car. The grant is applicable to eligible EVs priced up to £37,000, thereby promoting more budget-friendly options within the electric vehicle market. Transport Secretary Heidi Alexander reiterated the government's dedication to this initiative, stating, "We're delivering on our promise to make it easier and cheaper for families to go electric. This is about backing drivers, putting money back into people's pockets, and creating the jobs and growth that will drive Britain forward, delivering on our plan for change." RAC Head of Policy, Simon Williams, expressed strong approval of the grant, commenting, "It's great to see details of the first 2 models qualifying for the full £3,750 electric car grant. This represents a significant saving for drivers, which we hope further stimulates demand and encourages other manufacturers to follow suit." He added, "We've long called for the government to reintroduce an EV grant aimed at the more affordable end of the market, so it's very positive to see this happening in support of the switch to electric motoring. The scheme is designed to boost consumer confidence and encourage wider adoption of electric vehicles by directly addressing the primary barrier of upfront cost. These targeted incentives are proving effective in bringing down the cost of new EVs for consumers." And that brings us to the end of our news roundup for today. And that wraps up another electrifying episode of ElectroDrive News. We saw Europe surpass 1 million EV registrations, highlighting a significant market shift. We also uncovered the surprising reality of higher insurance premiums for electric vehicles. Meanwhile, the UK government's expanded electric car grant is making EVs more accessible, with specific models like the Ford Puma Jenny and e-Tourneo now eligible for substantial savings. Don't forget to like this video if you found it informative, subscribe for more cutting-edge EV news, and hit that notification bell so you never miss an update. Let us know your thoughts on these stories in the comments below, and follow us on our social channels for even more electrifying content. Stay charged, and we'll see you in the next one.